So in this video, we're going to be talking a little bit about trading anxiety, that feeling that you get where you're in the position, it's going in the right way. And this, I think, happens a lot when you're a day trader and you're trading off of a 1 minute chart. And when you're trading off of the 1 minute chart, there are a lot of swings that can take place, especially, for example, like if let's say like you're in like a stock like Roku. Right, Roku can within a 1 minute chart, you can see a stock can go from 134, especially a stock like this can shoot all the way up really quickly to 106, can swing all the way back down, come all the way back up, and it can create a lot of anxiety, especially if you're staring at your P&L. Whether you're up or down on the day can at sometimes make a difference in how much anxiety you feel. One of the biggest things that I found for me in helping managing anxiety when it comes to particular trades, at least the way I trade, is I just start looking at other stocks, right? So instead of paying attention, for example, let's say looking at Roku, let's say, for example, you bought Roku maybe early at the beginning of the day, right? And Roku is maybe coming back down, right? You're looking at the 126s down here as your support. Maybe you bought it down here and then now the stock is coming right back. It's 127. You're thinking, is the stock going to turn down? Sometimes I'll just put in an alert, right? I'll like right click and maybe put in an alert. If the stock hits a certain thing, I'll get an alert. It'll pop up. This way I don't have to actively focus on watching a stock, because maybe just focusing on that one stock and on that one trade is creating too much anxiety. Plus, it distracts me from being able to look and find other potential trades that I could be able to make. Another thing that might be of what's causing anxiety within an individual is you might be holding too much size. You might not realistically for the particular trade, right? Maybe like on a penny stock, you're used to taking 3 or 4,000, but on a stock that has quite a bit of movement, it's a different scenario because the stock can swing very wildly, 30, 40, 50 cents. And whereas comparatively to like a penny stock, maybe you're trading it for like a 10 or 15 or 20 cent move. And what happens with most people is that they end up getting into a stock for whatever reason. Maybe you normally trade 500 shares, but for whatever reason, maybe the movement in the stock, maybe just the volatility that's getting you, and you're trading your normal 500 shares, you start to feel a little anxious. What's good to alleviate that anxiety is just to shave off some of those shares. If you've got 500, shave off 100 shares. See how you feel. If you still feel a little bit of anxiety and even looking away and looking for other scenarios that you might be interested in trading doesn't work, shave a little bit more off, take another 100 off, so that maybe you only have 300 shares. It's better to be in the trade and to see the trade out and to affirm to yourself that you made the right call. Because one of the worst things that can happen as a trader is where you take a trade and you get shaken out and then you look back at it and you're like, damn it, I was right. Right. And you kind of kick yourself, for being shaken out. You're like, I should have stayed in the trade. Right. That's happened to me, especially early on in my trading career. When I first started, when I was in, my early 20s, there were so many times where I would call stuff out and everybody else in the room, like, a half hour, an hour later, they'd be like, did you get that? And I look back over the stock and it'd be up, 60 cents, a dollar, maybe more. And I kicked myself because I got shook out. Whatever was going on, in the time frame that caused me to get out, especially when you're new, those scenarios, when they repeat themselves, have a very negative impact on you as a trader, because then you start to doubt yourself. You start to doubt your ability to find trades and to find your setups. And what it does over the long period of times is it creates a negative effect in your mind. You start to doubt yourself as a trader. You start to doubt your ability. Maybe this isn't the right job for me. Maybe this isn't the right career. Maybe I'm just not cut out to be a trader. And the reality is that a lot of those small things can be alleviated by taking subtle steps. Sometimes even I trade from home. Sometimes I get up and I'll walk into the other room. I'll walk back, I'll get up, I'll stretch my legs, I'll go use the bathroom, I'll do other things so that I'm not just focused, on a particular trade. There's sometimes where, a stock will gap up a little bit and then it'll immediately, and you're like, oh, do I gotta get out? And it immediately comes right back down. And at the end of the day, like I've said multiple times, is that it all comes back to having one of the most valuable traits that you will need for a long-term career in trading is patience. Patience that comes, sometimes it's like patience that comes with age, and sometimes it's just the patience that comes with knowing that you know what you're doing, right? If you've been trading for a certain period of time, you know the setups, you see them, they come clear as day. But for whatever reason, something blindsides you, right? It distracts you from paying attention to all the signs that you saw going into the trade. And that's why I said repeatedly before, don't trade with your P&L up, right? Pay attention. The very first thing that you always want to look when you look at a trade, as soon as you pull up a chart, where's my support? Where's my resistance? The very first question that should pop into your head. Where's my support? Where's my resistance? Where am I going to get into this trade? Right? Because maybe you see a stock going up, but you have no idea where am I going to get in. Sometimes you have to wait for the stock to play out. Sometimes you have to wait for support and resistances, especially on a gap up. Especially on a gap up, sometimes you have to wait for support and resistances maybe within the next 10, 15, 20, 30 minutes to show themselves. And then you can play the trade for the rest of the movement and not just go in for that little bit of a scalp. There's a lot of times where I'm trading, for example, I already knew watching an Apache from the previous days, right? Because I've been trading this stock for the past couple of days already. And so looking at the very beginning of the morning, I saw that Apache was basically right back to where it came at the beginning of the day. Looking at the 5-minute chart, right? 5-minute chart for today, right here. And I know this chart is having the stock every time it comes to 3250. It comes down, right? Came down here, came down here, came down here, came down here. So I see the stock, I see just scrolling out at the direction of the chart, right? Which way is the stock leaning, right? The stock is leaning more towards the downside. Yes, the stock gapped up, but in the short period of the past 3, 4, and 5 days, what's the direction of the stock? The direction of the stock is down, right? I can see that. It's something that you should take notice of when you're looking at a trade, and maybe you've traded this stock the past 2 or 3 days, or you've traded this stock before. Very first thing is maybe on the past 5 days, what is the direction of the stock that it's going in, right? So that when you're short a stock and you're like, should I get out? Remember, what is the overall momentum, right? Where is the momentum of this particular stock going in this particular time, right? It's going to the downside. So I know that these shakeouts from 32 to 3250, I'm waiting for my opportunity to go short, because I know from the past couple of days, when it hits 3250, it's going to back off. It's going to back off, and it's going to take time, literally the entire day, right? Literally from 11 o'clock, literally the entire day, the momentum of the stock was down. And all you had to do was breathe in, sit back, and let the trade unfold. You literally set this stock like this. You set it and forget it, right? I look back at it occasionally, see where the stock is. Is the direction still down? Yes, good. I'll keep on looking for something else. And that's kind of what helps me I do day trade. I do take positions during the day. I take positions and I swing them overnight, or I'll swing them over a week, or I'll swing them over a month or 2 months or several months, because I'm letting the trade unfold. I'm looking at the direction. What is the direction, right? For example, looking at something like GE, right? Looking at GE over the course of looking at GE over the past couple of days, does it look like, which is the direction? The direction looks like it's more up. If you were trading the stock going this way, right? if you were watching this stock over the past couple of months, is GE direction still going down? Yes. Okay, I'll come back. I'll come back to it later. GE direction still like it's going down? It is. Okay. GE direction looks like it's a little sideways to up. I know to hold my long. Same thing, for example, with Mattel. If you had been trading, you literally could have held the stock from like September, right? September, October, November, December. Like, what is it? 6 months already? 7 months? Excuse me. September, October, November, December, January. Right? 5 months of what's the direction of the stock? Is it still going up? Yes. Okay, I'll look at something else. Right? Instead of paying attention to, am I getting shaken out? Look at the gap down. What's going on? Again, what is the direction? What is the direction of the trade that I'm in right now? And so it makes it much easier when you can remind yourself of, why did I get in, right? What was that was sometimes we forget to ask, why did I get in? I got in because it double bounced right here at $10. And so, it gapped down to 10.75. What do I do? Should I get out? Should I take my profits? What should I do? You go back to what got me in. Got me in was the double bottom at 10s. I'm gonna hold and wait and see what happens, right? And then you'd be sitting pretty at 1440s, right? That's like a 4-point trade. Just paying attention, reaffirming to yourself, what was it that got you into the trade? It's very important to understand support and resistance every single day that you come into the office, every time you sit down to the trading desk, is what is my support and resistance in the Dow? If you trade a lot of NASDAQ, where's my support and resistance on the NASDAQ? Am I seeing an expected pullback in the NASDAQ? Great. Maybe that will help me to stay short, because maybe the particular stock that I'm trading is a NASDAQ stock, or it's in a particular pool of stocks, right? It's in a specific sector. What's that sector doing? That sector looks like it's going to be hitting a resistance and coming down. Good, I can hold my short. Or I'm seeing a breakout. Okay, I'm long. Good, I can hold my long. I see a breakout in the sector, so I'll hold my long. It's always important to reaffirm to yourself, why did you get into this stock? And is what is happening right now telling you a different story, right? It's very important to keep those things in mind when you're trading. Much success to you in your trading day. Thank you for watching. If you like the content, feel free to like, comment, and subscribe. Take care.